Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It was a very whipsaw price action overnight after US Federal Reserve Jerome Powell left a sour taste in the market. The US dollar index, which measures the greenback strength against a basket of 6 major currencies, staged a sharp U-turn from 110.24 to a high of 112 figure and then settled, that is, around 111.90. After, as widely expected, the Fed hiked rates 75 basis points. From there, the comments from the central bank after the rate decision and following the press release, Powell stuck to his very strong hawkish tone and also impact the previous released statement that is sent the US dollar rallying. It would seem that the central bank is not quite finished in terms of raising rates and are determined to try and get inflation lower. This in terms saw the US dollar holding its gains, sent the rest of the market lower. Looking at the Australian dollar, the market staged a very sharp U-turn from the region of the top side of 64.90 and plummeted down to a low of 63.40. From there, the market did take out the level of 63.85 and also posted an engulfing candle. From there, we have to keep an eye on the market's price action now, because if we see a close underneath the level of 63.20, that could reinstate the downside bearish sentiment and confirm that the bearish outside range day, and therefore look towards the region that was recently challenged back here in early October of 61.65. The euro was also very whipsawed after challenging the top side around 99.75, plunged to the lows of 98 and took out the level of 98.25. From the close, does give a little bit of a concerning view that the bearishness may increase after the engulfing candle, and also negative technicals may see the market plunge back towards the bottom side of the range around 96.65. Keep an eye on this current pattern because we did take out the trend as well, and we would need to see a break back above the region that is around 98.55.70. The dollar yen, well, the market was very whipsawed after taking the stab at the levels around 145 and then rebounds and leaves a somewhat hanging man, I believe, because the fact is that the technicals are still negative. Even though the dollar was stronger, I feel dollar yen is still likely to struggle for any fresh sustainable rallies, and that is towards 148 or 148.70.90 to foul. I like the way this market's starting to shape up in terms of the fact that since that strong rejection from 150 should leave pretty much a downward challenge towards 145 where we were overnight, and maybe lower towards 143.40. The pound was very disappointing as well, as the market took out the level of 114.45 and closes on a negative tone. And in light of the bearishness from the RSI, could see a little bit more to the weaker side. That is down towards 113.60, and where 112.80 may deliver a round of demand. All eyes on the Bank of England when a bank rate decision may see a 75 basis point rate hike, which would bring the cash rate up to 3%. It'd be more about what the statement has to say due to the recent inflation that was released, and it was quite a strong number, around 10.1. The boundaries for gold haven't changed, so locked in 1,620 to 1,666. We did take a stab at the top side once again and was rejected. And in light of the rejection for the midway point and also a weak MACD, I still feel gold is destined to challenge the lower side of the range. That is around 1,621. A break there would give further scope to the downside and leave the move down to the 1,500 region. Wrapping up with oil, the market still challenging that top side level around 89.65. It would seem this level is a little bit of a struggle to get through, but keep an eye, as the fact is a break above 89.65 and a close there of New York would give further indication to a potential target of $92 a barrel. That wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the day.